our webinar on investor educations in times of high inflation, financial repression, and market volatility. And this is part of the Global Money Week. I am Guillaume Proche. I'm the Managing Director of Better Finance, which is the EU-level organizations dedicated to the representation of European investors and financial services users. We find this issue extremely relevant and very timely for two main reasons. The first one is because savers, long-term and pension savers in particular, are suffering right now from an unprecedented financial repression. Financial repression is a term of economists, not of us, which, if I summarize it, is the public policies that engineer very negative, especially right now, very negative real interest rates, which means the difference between inflation, which currently in Europe, as you know, has increased a lot since 2021, which is now in the neighborhood of 9% in the Eurozone itself. The difference between inflation and nominal interest rates set up especially for the short term by the European Central Bank, which are currently around 3. So the difference between 9 and 3 is 6% loss of purchasing power, what economists call a loss of the real value of the savings, especially and mostly the savings which are linked to interest rates, to these nominal interest rates, which are basically the majority currently of the savings of the financial savings of European citizens. I would say there are two big pots, if you want. There is the bank savings account, with, again, interest rates very low compared to inflation. So we are losing a lot of purchasing power, of real money there. And another big pot is other interest rate related products like capital guaranteed life insurance, which the British call with profit policies. And all the part of pension funds and investment funds that is linked to interest rate products like bonds, like the bonds issued either by sovereign entities or by corporations. So that is a very negative and huge impact, especially for pension savers who are saving for decades. And it is really a problem that people need to be aware and need to be aware of the possible ways to mitigate this huge problem. And the second reason why we find this webinar extremely timely is because, as some of you know, the European Commission is planning to release its proposals for what it calls a retail investor strategy beginning of May. And adult investor education will be at the core of this project. And in fact, the EU policymakers, we believe, can act very effectively to improve it thoroughly by doing mainly two things. First is to give access for people to independent investment advice, to adults I'm talking here. And second, to ensure that savers and investors are provided with simple products and clear, fair, not misleading, short and comparable key investment product information. And in fact, we indeed have asked the two distinguished members of the European Parliament and keynote speakers to discuss these issues further with them. Let me now give the floor to our partner in this webinar, Bernard Delbecq, the Senior Director of EFAMA. Bernard.
Okay, thank you very much, Guillaume, and hello, everyone. Indeed, at EFAMA, I'm responsible, among other things, for the activities of EFAMA in the area of investor education and financial literacy, in close coordination with our investor education platform. We have been active in this area for many years. Actually, checking in preparing this event, I noted that it's exactly 10 years ago that we started working on a report, our first major report on invest education, which is available on our website, which was published in 2014, and which included a preface from Florent Messi, who really pioneered the work in invest education at the OECD and with a colleague of Chiara Monticone. And there was also a contribution from Annamaria Lusardi and from you, Guillaume. And at that time, I would say that very few officials in Brussels considered that financial invest education, was essential. In Brussels, as a field. And fortunately, this has changed with the arrival of Commissioner McGuinness at the European Commission, because now the Commission recognized that, as Guillaume said, alluded to, we need educated consumers to benefit from the retail investment strategy, so that they can understand not only simple information, but from the work of Annamaria, we know that simple concept like inflation and interest rate is not necessarily understood by the majority of citizens. And we remain convinced that more progress is needed in this area. And it is in this context, with that in mind, that we prepare this event together with Better Finance, also knowing that the retail investment strategy is coming soon, and hoping that it will also include some ideas, some measures, some proposal to further strengthen financial literacy. And we hope that the presentations today and the panel discussion that will follow will indeed provide new ideas for future initiative. So now it's time to move forward and to give the floor to the high-level speakers who have accepted our invitation to participate in this webinar. And we're going to start with the two distinguished members of the European Parliament, Stéphanie Yon-Courtin and Isabel Benjumea. Both Stéphanie and Isabel are very active members of the European Parliament ECON committee, and both recognize the importance of financial education to, I would say, to empower citizens to become active consumers in the financial area. So without further ado, I'm pleased just to give the floor to Stéphanie, if you would like to start. Stéphanie, you have the floor.
Thank you very much, Bernard. Hope you are all can all hear me. Great. Good afternoon to all the participants. Well, let me start by thanking EFAMA and Better Finance, and in particular Bernard Delbecq and Guillaume Prache for their very kind invitation. I'm happy to be able to speak at today's event together with my dear colleague from EPP, and today to contribute to the goal of the Global Money Week, and indeed, as Guillaume has just said, very timely ahead of the announcement of the retail investment strategy next May. I think today's conference addresses a very important topic which needs to become more prominent in our European debates: how to engage and better involve young citizens in the market, in the capital markets union. Without a clear answer to these questions, a truly integrated capital markets union will not see the light of day. Financial education can take many shapes, many forms. It can be adding financial skills to the school curricula, learning how to manage pocket money, or encourage our younger generations to look for funding when they have a project. But financial education can remain quite abstract, and this is why I prefer talking about financial coaching, which I would find more appropriate to both to engage people in this discussion, and second, to outline really what it really is: a never-ending learning process, starting from the youngest of age until our retirement. Financial coaching can happen at different places, and will, with the help of many different actors, It mobilizes everyone at any possible time. In fact, financial coaching can happen at university, at the workplace, and in many other social occasions. Financial coaching can involve teachers, can involve employers, trade unions, NGOs, local associations, financial advisors, and so on. This is why our objective must be clear. Citizens should be aware of all the financial possibilities that are available to them, for example, to finance a project, but they should also be coached to use what I like to call the power of their savings to the best of their ability. Compared to the US, the EU is definitely lagging behind. Our market is still highly fragmented, our financial sector is highly overbanked, and the retail investors are not incentivized to invest. As compared to other countries where finance is introduced at early stages and early ages in the school system, financial education remains, I think, very neglected in the European Union. So why don't we introduce finance classes in high school or earlier in Europe? One of the reasons, I think, for the lack of engagement by retail investors in financial markets can also be explained by the lack of trust and fear of the unknown, fear of the risk. Consumers prefer saving than investing money in the real economy. Very interestingly, the rise in crypto has awoken the eagerness of younger generation to participate in financial markets. Why? Well, I think it's much more attractive and user-friendly for younger persons to go on a app than to talk about investment possibilities with their banker. However, this can be very quickly dangerous because without any proper information and guidance, this could lead young investors to take a lot of undue risk. Why? Because they don't have a lot of all the information, a lot of them, sometimes misinformation in their hands to make an informed decision. The FTX collapse was, I think, for example, quite alarming in that sense. It became very clear that those new channels to do finance and which attract a new generation of investors need to be watched very carefully. How can we remedy the situation, shift the dynamics, and incentivize the next generation to engage in real financial markets? I think the very, very first question we should ask ourselves is, why do consumers prefer saving than investing? Understanding how to break this circle will be the first step for regulators to move forward. The drivers and incentives for savings are quite varied. Saving for retirement, for example, is more a one-off decision for citizens and very dependent on national incentives, taxation in most part. It signals that citizens are mostly confident that public pension will be appropriate, but it also, most importantly, outlines that they are not exploiting the potential of what investing the money and their money could bring to them in the future. The upcoming retail investment strategy precisely aims to address this. Our discussions come therefore very timely. Many have high hopes for this piece of legislation, including me. However, will it be up to the task? The inducement debate should not overshadow other fundamental topics that need to be addressed in the frame of this strategy. A particular emphasis should be put on facilitating access to financial markets, reducing red tape, better regulating investment advice, and most importantly, emphasize the urgent need to promote financial literacy. Enhancing our current system will serve the long-term interest of the end investors and enable them to have affordable and personalized financial advice, as well as equal access to a broad range of financial products with safeguards. Finally, I think we are running out of time. And it's up to us, regulators, to take this opportunity with this strategy to push for meaningful challenge this time. However, we need to keep in mind whatever we decide today will not materialize in the short term, but will have long-lasting effects. This is why I believe now is the right moment to act. So thank you so much for these very, very timely discussions.
And thank you so much for your opening remarks, Stéphanie, which were quite interesting and powerful. A powerful message, I mean, to all of us, and in particular also to the European Commission and Tatyana, because as we know, Tatyana is, I would say, the architect of the CMU. So, and the CMU still, needs just to be strengthened, in particular in the area of financial education or coaching, as you said. So, many thanks for these remarks, Stéphanie, and I may please now to give the floor to Isabel.
Good afternoon, and thank you very much for this kind invitation, both to Better Finance and EFAMA. And also, I want to say hello to my colleague, Stéphanie Yon-Courtin, and we've both worked together on CMU from the very beginning in this term. And I want to say I fully agree with most of the things you've said, and I think we need to join forces in this very important battle in favor of the CMU, full and real CMU within the European Union, and especially regarding financial education. In my opinion, this conference is essential as this moment that we are living in our countries. I've said this several times that in my opinion, we must acknowledge that there is no culture of financial education within the European Union. And in my view, this is the source of many of the problems in the markets, but essentially two of those problems are particularly important to me. The first would be the participation of retail investors in the capital markets is very low. And also regarding entrepreneurs is that they rely too much on bank lending as a way of financing their projects, not taking into account all other available financial instruments. At the end of the day, we can say that there is no equity culture in Europe. Since 2020, two big crises have struck our continent and economies. However, COVID-19 pandemic and the war in Ukraine have not only demonstrated the importance of restructuring our markets and strengthening the single market, but also have accelerated the process of European integration and participation of the investors. In this sense, the importance of financial education has become greater if we take into account some elements of the current financial environment, such as the inflation, the high interest rates on pension systems that will have to be largely compensated by private savings. However, this is still a long way to make financial services mainstream and accessible to European citizens. Financial education, therefore, plays a key role in achieving this goal. It is essential to build a better, more educated, and more independent decision-making society. Investor literacy is an instrument that makes our societies stronger and more democratic, where individual citizens are empowered to manage their personal finances and make their own investment decisions. A skill that leads, at the end of the day, to more independence and more freedom. It is the way to not only depend on the salary, but on an investment or a saving plan made with determination over the period. A higher investor education allows citizens and companies to make informed decisions, to face the risk of managing their assets on their growth. Markets are often seen as something unpredictable and capricious, most of the time seen as a groundwork to earn money easily and quickly on the stock markets. This is a superficial part of the markets. Behind every financial asset, there is a company, a business, and job creators with their particular dynamics. This approach is taken mainly because investing requires time and patience. Investing, unlike speculating, is based on supporting our return on the good evolution of business, the forcible part of investment, leaving aside the obsession with making money with short-term fluctuation in prices. Hence, the long-term orientation to the extent that company needs time to grow their profits. The institutions and politicians who are part of the financial system, which is us, we have the responsibility to contribute to achieve this objective, developing and supporting initiatives that allow citizens to increase their knowledge of economics and finance. We must do it by trying to reach all levels of ages in society. The earlier, the better. That is why it's important to celebrate an event like this one and to talk about investors' education. Financial education makes possible to ensure better access for all citizens to their finances. Moreover, the digitalization of finance has led to finance becoming a more familiar, closer, and more attractive option to many citizens. And as Stéphanie mentioned, we've noticed that during COVID, and especially regarding, for instance, crypto assets. In addition, I consider that our goal needs to be an investor culture which allows responsible investment behavior. One of the main causes of the absence of investors' education in Europe is the risk aversion. This leads, among others, to the bank lending bias that our companies and households suffer. It is the time to open our minds and take the challenge to foster retail participation in our capital markets. Investor education is a key tool for the completion of the long-desired capital markets union in Europe, as both Stéphanie mentioned before, and I said at the beginning. Retail investors play a key role in strengthening this union, and their participation in the markets is indispensable. The lack of retail investors' initiative is based on fears, mistrust, and insecurities about the market. This is due, in a large majority of cases, to a lack of training and knowledge about the functioning of the capital and investment markets. The client who does not know the details of financial products is afraid to invest in its capital and take the risk. It is essential to establish a stronger capital market orientation among market participants, especially to retail investors which have risk aversion. Silicon Valley Bank case or even the Credit Suisse situation need to serve for a purpose. It is the perfect timing for making us, as decision makers and stakeholders, the activists of the strength that financial markets have in Europe. We live in a global world, and the European Union must be able to compete in it. For our European capital markets to be strong and attractive to invest to international eyes, it is essential to strengthen the confidence of retail investors. This confidence often comes with better, clearer, and more independent information. And digitalization can enable this process of educating and informing consumers to take place in a more efficient and attractive and universal way. We are facing coming years marked by a higher inflation rates and market volatility, a very demanding context that demonstrates the importance of knowing how to develop good investment behavior, an objective that can only be achieved through proper financial education. I believe that now is the time for everyone, from the public to the private sector, to join forces and take advantage of the impetus that the European Commission is giving to raising awareness on the importance of financial education. I share the demand of an ambitious plan from the Commission side regarding the retail investor strategy. And I share also the views on the need to give a very, very primordial part in it for financial education. It's not only because it's needed today, it's because it will be the only way to make our markets very, very competitive in the future. So in this sense, I want again to congratulate for the organization of this event. I want to wish all the best of the luck for both organizations, and I want to call them to make us, the policymakers, be brave in the fostering of the capital markets union, and also in preaching on the need of a true and long-term strategy on financial education. Thank you very much.
Thank you very much, Isabel. And while we're organizing this event, it's of course just to have an event that can be attended by many participants just to listen to you. But I think one aspect also of this event is, in a sense, to promote this dialogue between, in these cases, the MEPs and policymakers like Tatyana from the European Commission and Chiara from the OECD, because there were strong messages that were given by both of you to the European Commission to be ambitious, in particular in this area of financial literacy. I should also have added that, as you have seen in the program, that the program will finish by a panel discussion. And in this panel discussion, we're going just to have a discussion with 3 members of the European Youth Parliament. And I'm pretty sure that your comments and your suggestions on how to trigger, better interest of the population and the younger population in saving and investing will draw the attention of this colleague from EYP, and we'll see later how they react. So thank you very much. Actually, I would like to say that, if you would like just to share your speeches, because they were so powerful, we'd be happy, just to post them on Better Finance, on EFAMA website, and, to circulate your intervention also to the participant to this event, because I think that those words merits, to be kept well in our mind. So many thanks, Isabel and Stéphanie. And I'm now just happy to give the floor to our next speaker, Professor Lusardi. I think it is really thanks to Annamaria that financial literacy has become a specific field of academic research. And I would say it is also fair to say that her scientific findings have been instrumental in convincing policymakers throughout the world. I mean, not just in the US or in Italy, where Annamaria is very active, but in many other regions and countries, to consider financial literacy as a public good that requires special attention, I would say very special attention. So Annamaria, I'm very pleased to give you the floor.
Thank you very much for inviting me. It's an honor to be here today, and in particular to speak and hear from the member of the European Parliament. Because it is Global Money Week, I think it's very important that we take a long-run view and we look into the future, and in particularly focus on financial education, but in particularly of the young. Because I have just a short time for a presentation, I want to focus the attention on financial literacy of the youth. If we start with them, then we can build a future. We can provide access to a large part of the youth population. And this is the main message I would like to push in this special week dedicated to making sure that young people are able and equipped to manage money. I have prepared a short presentation, so let me just share it, and hopefully you can see it. What I would like to argue here is, why do we need financial education? So I always have this phrase that financial literacy today is equivalent to reading and writing. In other words, we need to be able to speak the language of finance, to participate to society. And the requirement is so because the world has just become more complex. And so the reason why we are today not, in a sense, financially literate, because we are ignorant, is not because we don't know, but because we have to catch up with a world which is changing so fast, from digital technology, from the greater responsibility that we put on the shoulder of young people for their future, and they are facing longer life expectancy, a decreasing welfare, uncertain economic job prospect, and very complex financial instruments. And with the pandemic and the inflation and the war, adding new risk. So, we need to equip the young people to be able to make financial decisions, taking opportunities of the financial market. And this is why I'm so glad I heard that we do want to foster participation in the financial market, foster the capital markets, But to do so, we need to have people that speak the language of finance. When we look at the data, and I'm referring to the most recent data we have available from the Program of International Student Assessment, a visionary project started by the OECD in 2000, and where in 2012 we have started adding measure of financial literacy. So we can actually see now how much do the young people know about this important topic. And as you can see, here are two things. First of all, many countries are not participating in this measure. And so if you don't participate, how can you make policies about young people? So many European countries, we don't have data for them. And the one who are participating in many of the European countries, as you can see, are actually ranking below the OECD average when it comes to financial literacy, even though most European countries have well-developed financial markets. So, it's worrisome that, in Europe, about 15% of students, in fact, are completely illiterate when it comes to financial literacy. And even if we look at all of the degrees of knowledge from the level 2 to level 5, which actually looks at the sophistication of knowledge among these 15 years old, as you can see, many countries have young people which are only, have low proficiency when it comes to financial literacy. And again, think of the challenges that these young people face, in particular in today's world, right? And this is why I think it's so important that we focus our attention on the youth. Not only are many people not financially literate, but when we look at the one who have the lowest level of financial literacy, these are the disadvantaged students already. The student coming from low socioeconomic background, meaning, for example, parents with low education, low income, low wealth, an immigrant background. And in some countries, we also see a gender difference in financial literacy, even among these very young people. In other words, not only financial literacy is low, but is in particular problematically low among the group that might need it most. And we have to think about equality and not leaving anyone behind when it comes to participation in the financial markets. And this is why the research has been focusing on what can be the potential solutions to this low level of financial illiteracy, the level of financial literacy. And we have done a meta-analysis. We have looked at all of the financial education programs done around the world and actually found that financial education is particularly effective in increasing knowledge, that financial education in school is a good and effective way to raise the level of financial literacy. I wanted to show you that, in fact, financial education today is a global topic, not just a European topic, even though in Europe, I think, more than ever, we really need young people to be equipped to make this important decision that they have to make. But as you can see here, in the many countries we have considered financial education has been effective both in developing and developed countries. So, I want to not only use the data and the research to try to focus on the problem, but also indicate what is the research that points to solutions. And the solution here that the research, I think, clearly indicates is that to change those statistics, we need financial education in school. Why? Because that's the way to make it rigorous. If people learn from parents or from their own environment, they might actually not get much education. We need an access to everybody. And the school is also the most cost-effective way to actually guarantee that access to everybody. And this is why there is a case for making financial education mandatory in school, because we can all benefit from it. So where to start? I think it is an investment in the young. So financial literacy in school can be a good way, for example, to do prevention, and can be a good way to guarantee a fair access to everyone. And we have guidelines from the OECD to do so. And not only, but we have experiences right there in Europe that shows how countries have been able to actually make financial education mandatory. And look at the example of Portugal, which made it mandatory in 2018. And as you can see, or before in the previous graph, they ranked now at the OECD average. So it's a good investment in the young. I had discussed this earlier on and presented some of this work and some of the research indeed that the commission organized by the European Parliament in why is it that young people should care about finance and taxation. And so if you want to read a little bit more about this topic, it's available on the website of the European Parliament. And here I'm just repeating some of those things, because if we invest in the young, we can actually try to guarantee a better future, not only for them, but also for us as well, because I think we will have a population which is better equipped also to deal with crises. And I want to finish with an image. If I had to give you an image for financial literacy, consistent with the message of Global Money Week, I think it's like water in an ecosystem. In other words, you need regulation, you need good instrument, you need a good ecosystem to make sure that the economy works, but you also need the water to make sure that it flourishes. So let me repeat indeed the message of Global Money Week for all of the youth: plant your money, plant your future, and let's help those young people to do so, because at the end, they are our future as well.
Thank you very much, Annamaria. As I told you, I mean, the expertise of Annamaria in this field is immense, and that makes also recommendation very powerful, because they are evidence research based, and they should be taken very, very seriously. Annamaria, we are going just to hear more from you in the panel discussion with the young people, and your emphasis on the young people investment in the future of the young generation will certainly be further discussed. I'm now pleased just to turn, let's say, to the policy side, I may say, and starting, or policymaker side, starting with Chiara Monticone. Chiara wrote a PhD thesis entitled Financial Literacy and Financial Advice, Theory and Empirical Evidence. And soon after, Chiara joined the OECD to put her knowledge, research, expertise, and skills in assisting the OECD further develop its activities in this area. So again, we have with us a true expert, and we're very happy to give you the floor, Chiara.
Good afternoon, everyone. Thank you, Bernard, for the very kind introduction and providing the times of my PhD. I also have a few slides. Let me bring them up. So, okay, this is really just an introduction of what I plan to say. So I would like really to start by highlighting that all the work that we do and what I will be talking about today, it's not really the work of myself or the team here at the OECD, but it's the work of the International Network on Financial Education, which is a network of public institutions, of policymakers from really around the world, not just from the OECD, that get together regularly since 2008 to discuss about collecting data and measuring financial literacy, about developing strategic approaches to financial literacy, the so-called national strategies, to analyze the implications for financial education of recent trends like digitalization, the growing relevance of financial resilience, sustainable finance, how to support key target groups such as young people, women, MSMEs, seniors, migrants, and so on through financial education. And we also organize Global Money Week, and we are very happy to celebrate it with you this week. And we also contribute to a number of global fora, technical assistance projects, regional projects, to really support countries in a practical way to develop their financial literacy policies and programs. And we are also very happy to work with the European Commission in many different ways through technical assistance, but also with DG FISMA in developing practical financial education tools, as myself and Tanya will discuss later on. I would also like to spend a few seconds to remind that within the OECD framework for financial education, first of all, we think that it's crucially important to put consumers at the center. The ultimate goal of all the policies that we develop, that we support countries to develop in financial education and related is consumers' financial well-being, and that we see financial education as a complement to other policies such as financial consumer protection and financial inclusion. So by no means we consider financial education as something that is standalone or that could solve all the issues that consumers face in the financial marketplace. As you can imagine, at the OECD, we like evidence a lot, we like data a lot. So I would also start by presenting some data, and it's very nice that Annamaria presented some data from PISA, because I actually didn't put it in my slides, so you will not see it twice. I'm actually focusing on the data that we have on adults. So we know from a series of surveys that we conducted over the years that levels of financial literacy in general are quite low, and we consider financial literacy as not just financial knowledge, but really as a combination of knowledge, but also attitudes and behaviors that would contribute to ultimately improving individuals' financial well-being. And as we know from these surveys, the financial resilience of individuals and households is quite limited. This is pre-COVID data that shows you the ability of people to face income or expenditure shocks. So you can imagine that by now the situation is probably even worse. And it's interesting also to focus on some data that we have on topics that are relevant right now, such as inflation, or that are relevant for the discussion that we're having today about investments and savings. So it's interesting to see that most people have a fairly good understanding of what inflation is, but then when they're asked about how this works in practice and how it affects the time value of their money, then much fewer people have a good understanding. And we see from research conducted in different countries that not only inflation is higher for lower income households, because they spend a higher portion of their incomes on basic goods like energy and food that are more affected by inflation, but also that the understanding of inflation is lower for lower income households. So there is a sort of negative compounded effect on this. It's important to keep this into account. And as we know, knowledge of concepts that are relevant to perform meaningful saving and investment decisions, it's also quite limited, such as around an understanding of risk and return, diversification. And one thing that it's also comes out from the PISA assessment, the graph that you see on the right-hand side of the slide, is that when young people at 15, they were asked in the latest PISA assessment to what extent they had been exposed to a number of financial terms. All the terms related to investments or savings, such as compound interest, diversification, return, shares, and so on, they were amongst those they knew the least. So again, this is goes in the direction of what has been mentioned before during the opening remarks by the members of the European Parliament. Of course, the OECD is well aware of all of these challenges, and this is an area that we have been working on for years. I would just like to draw your attention on a few elements, on a few topics that I think are particularly relevant for our discussion today on how can different stakeholders from public, private, or non-for-profit sector develop effective and meaningful financial education. So I think 4 elements are very important: gathering evidence, adopting a coordinated strategic approach, focusing on developing basic skills, and developing programs that are effective and also consumer-centered. Today, I will actually just focus on the 2 items in green because I've already spoken about evidence a lot. And the last point, I've made it before in previous EFAMA webinars, so I'm not going to repeat that. But once again, I would like to draw the attention on the importance of a coordinated approach. You may think, how a national strategy or a coordinated approach is relevant now that we are facing like very short-term issues. How can we deal with such short-term issues such as inflation, rising interest rates, and so on, through something that is so long to put in place like a national strategy? Actually, it's actually very good to have such a strategy in place because it provides a platform, a coordination mechanisms across all the relevant stakeholders in a country to react quickly and in a consistent and good way to developments in the financial landscape as the ones that we are experiencing now. It's good to have the whole machinery in place to be able to react more quickly, to develop programs, to know who are the relevant target groups that should be addressed, and to already have mechanisms in place to address them. And it's also a way to ensure a meaningful involvement of all the relevant public, private, and non-for-profit stakeholders, also to manage conflicts of interest, and to address the target audiences according to their needs. Another point that has emerged in the discussions that we are having with members of the INF during this period, during COVID, but also now during this period of increasing inflation and interest rates, it's really the importance to go back to the basics, to strengthen the basic financial skills that people should have in order to take good decisions for themselves. Because inflation and interest rates do not affect everybody in the same way. It depends on your financial situation, on the amount of liquid resources, or on the relative debt, net debt position, whether you're a borrower or a lender, so to speak. So people should really have the skills and be equipped to make the good decisions for themselves. It's many members of the INF noted like how it's difficult to develop good programs teaching about inflation because you cannot just give one recipe to everybody. And it's also important to use this period in a sense as a teachable moment. Bad periods, difficult periods for personal finances, however bad, they are also offering some sort of opportunity to draw people towards impartial, reputable, trustworthy financial education resources in order to engage them in a conversation. And this conversation should include, as I said, the basic concepts that people can use. They should make people aware of the main characteristics, but also risks of financial products and services so that they can choose in the best way for their own personal situation. Should also help them to make active choices, especially in the fields of retirements and pensions and savings, so that people can actually make choices actively and not just rely on defaults or whatever is like accumulating passively in their bank account. And last but not least, it's an opportunity to explain to people also the features of new products such as sustainable finance products, while at the same time taking into account all the behavioral biases that affect financial decision making, and especially in relation to savings and investment behavior. And to this effect, I wanted to mention one tool or a series of tools that are already available for stakeholders or even for households to develop their financial education programs. So the OECD and the INFA have been developing core competencies frameworks on financial literacy for many years, and we have dedicated tools for adults, young people, and SMEs. We even have a core competency framework for retail investors that we developed with IOSCO 2019. But of course, more recently, I wanted to mention this financial competence framework for adults in the European Union that we developed with the European Commission, and I'm sure that Tanya will also mention this later on. This is really a tool that is, first of all, very flexible, can be applied in a variety of national and local contexts and to the needs of different target groups. It can support the development not only of strategies, but also of programs, assessments, evaluations, and so on. And importantly, it also focuses on a number of dimensions that are particularly relevant in today's context, including digitalization, with dedicated and specific competencies around digital financial products and tools, competencies around sustainable finance, competencies to develop programs focusing on financial resilience, and so on. So it's a very timely tool, I would say. And I would also, before closing, spend a few words on young people, because of course this week is Global Money Week, and also in a sense to complement what Annamaria was saying before. So the OECD has a recommendation on financial literacy, which recognizes the importance to start financial education from an early age. And of course, introducing financial literacy in the curriculum is one of the main ways to achieve this. It was highlighted in the opening remarks, and Annamaria again made the case for this very skillfully. But I think it's important also to remind the whole ecosystem, in a sense, that should also happen and come about around the introduction of elements of financial literacy in school to really make it effective in the end. Just having financial literacy in the school curriculum per se is not going to solve the problem. There needs to be a whole package with it. The curriculum needs to be implemented. There has to be teacher trainings, the development of adequate teaching resources. Often teachers, they're not necessarily able to teach these new subjects or even these new topics within other existing subjects. The exposure for students has to be of sufficient length and depth. So it's important that this is included in non-optional subjects so that not only certain segments of the student population are exposed to it, and should be, let's say, rolled out in a consistent way across grades and subjects and school levels. So I will conclude now just by giving you some next steps and sort of an overview of what is coming next in terms of INFA work in this topic, because you will see that we are trying to address all the challenges that are emerging and ongoing right now as best as we can. So for instance, we have recently launched a new dedicated working group within the INFA on financial literacy and sustainable finance. We're going to repeat the financial literacy measurement of adults. This is actually ongoing now, so we will have a new wave of this international survey with results coming out towards the end of the year. In parallel, we're also conducting a pilot exercise to measure digital financial literacy, intended as financial literacy on how to use digital financial services safely, in a sense. So that is also a very exciting project. And as many of you may know, we're working on a second competence framework for children and youth in the EU together with the Commission again. So this is it. Of course, I remain up.
Thank you. Thank you very much, Chiara. It's just very encouraging. I mean, to see, you know, the tools that have been developed. I mean, over the last years and almost decades. I mean, just to help stakeholders and the authorities to promote financial literacy, financial education. So I guess one and school are at the center of let's say what can be done. It'd be interesting, I guess, in the panel discussion also just to hear the views of the members of the EYP on whether besides schools, when you left school, I mean, you know, what else can be done so that they can access this material put together by the OECD. And now I'm happy to give the floor to Tatyana, who is leading the CMU project at the European Commission. One of the action of the new CMU plan that was adopted in 2020 was indeed to empower citizens through financial literacy. So we were quite pleased together with Better Finance and many other stakeholders that this was considered as a pillar of the CMU. And therefore, I think, Tatyana, you're best placed to explain the progress that have been made and possibly also to highlight some new initiative that will be promoted, including in the retail investment strategy. You have the floor. Thank you.
Thank you very much, Bernard. Of course, you mentioned it's new. It's already 3 years old. So we actually managed to do quite a few things in the meantime. Just to say it's and it's for the second day that I'm coming almost last. This time it's really last. So it's very difficult to say something new after so many good speakers said so many things. But the advantage perhaps is that I can react to what they said. So we'll gladly do that. So as an architect, or as somebody who has been called an architect of the CMU, I will at the very beginning give the CMU angle to the whole aspect of the financial literacy work and why it really matters in the capital markets union context. So obviously, as part of the longer term aspiration of the CMU, we always nourish the idea of increasing the scale and the depth of EU capital markets, because there's been identified as one of the key problems that our markets are underdeveloped, they're lacking scale, they're too small, too regional, not well connected, and basically they do not compare well globally. So we looked into the reasons, obviously, as we always do, and so did many other policymakers and academics. And we've concluded that there's a lot of talent in the EU. There are lots of innovative companies that are really capital hungry. So there is a consistent demand for market-based funding in the EU, and this demand exceeds beyond the type and volume of funding that our banks are willing to offer. But what about supply of capital? So, as I said, our capital markets continue to be underdeveloped, and not least because there is a lack of retail investor participation. And Isabel has been mentioning this. I think also Annamaria mentioned the lack of engagement, retail engagement, and that this is indeed part of the problem. I'd like to compare, as we always use this comparison, or we always call SMEs, so small and medium companies, as the backbone of the economy. Let me call retail investors as the backbone of the EU capital markets, because retail investor participation and engagement is precisely one of the key determinants of the size and the depth of capital market. Because if we look at the examples of other global markets that are much more mature, that are much more liquid, much bigger in size, you also see that there is a much higher degree of retail investor participation. So This is the example of the US market, UK market, but also some of the member states, so like Sweden. If you allow me to quote what the recent 5 presidents op-ed, or an article that has been published in a number of top European newspapers, what they said there is that the EU's stock market capitalization remains to be half of what it is in the US, if you do a comparison in percentage of GDP, so gross domestic product. It is also lower than that of Japan. It is also lower than that of China, of the United Kingdom. But actually, Europeans save much more than Americans. So there is no actual reason why our markets have to be smaller, because there is a potential, but this potential sits in savings and doesn't work. So doesn't earn return for this people who are keeping those savings in banks, nor does it contribute to the development of the economy. Now, obviously, and a lot has been said today, also by other speakers, market-based investment does not come without risk. We all understand that. It is also at times very complicated, and it gets increasingly more complicated as we speak. I think crypto assets have already been mentioned. We also see that trading becomes much more digital. Often people engage without seeking any professional advice, so in what we call execution-only format. And in particular, we see that younger people are particularly eager and ready and willing to engage with capital markets via digital tools, which is a very good development, but at the same time also increases certain risk, increases also the influence in certain cases of social media. And those are things that need to be addressed. And of course, those are things that we would like those retail investors who are making those decisions in this very complicated setting to be aware of and to make those decisions in an informed setting. Now, of course, all of this assumes that retail investors know what they're doing, meaning that they understand what they want, so they understand their preferences. They know, what type of risk and amount of risk, importantly, they're prepared to take. And what does it mean, amount of risk? It means primarily that sometimes and more often you make money, of course. And this is why investment is important and makes sense for investors, but sometimes you do lose money when you take risk. This is the essential of risk. You cannot always win, sometimes you lose. And so for any retail investor, you need to weigh risks against the benefits and be fully aware of consequences of sometimes this risk resulting in some investment being lost and being able to bear those consequences. This is very important. The so-called loss absorption capacity is very important when it comes to retail investment, because otherwise we have situations of excessive debt and people actually not being resilient in those situations. Now, markets are known to be volatile. Many people mentioned today different shocks. Markets reflect investor sentiment. Each time we have a shock, which can be macroeconomic in nature, everything immediately translates on capital markets. They're like this immediate, reflect a mirror of the investor confidence, investor sentiment. So we saw it with COVID, we saw it with the more recent energy crisis, we saw it also with the turbulences that were triggered by the failure of some third country banks in the US and beyond. But volatility, and this is very important, does not always mean that people are losing money in the longer term. And I think, Annamaria, you did mention, and I think also Isabel mentioned patient investment or longer term investment, Because what happens today, if people are not educated, the moment they see that stocks are going down, people are starting selling stocks. But actually, the economic theory would say it is precisely the worst moment to sell stocks. You actually need to hold on when the value is restored back to fundamentals. Because if companies that are being listed are otherwise financially solid and healthy, there's nothing that prevents these companies to regain their value, also in terms of their stock prices, after the wind blows over, so to speak. So it is important, and this is part of financial education, being financial literate, to understand that sometimes you need to wait. You cannot sell stocks immediately when things do not look rosy. Also, obviously, not investing in capital markets today does not mean that one would not be losing money either. And I think, Guillaume, you did mention the inflation levels in Europe. The advantage of the capital markets, and I've just mentioned that, is that they have a tendency to bounce back eventually. The decrease in the value of money due to inflation is quite permanent, meaning that if you keep your cash in a current account today, it means that you would consistently be losing money due to inflation. But many people do not realize that. And once again, this is something that financial education would actually teach people. People who are financially literate, they understand this. But, and also as Chiara was explaining, these notions are not necessarily understood amongst the broad layers of the society. Just to say, according to the Harmonized Index of Consumer Prices, published by Eurostat, we had 6% inflation in the first quarter of this year and 8% in the last quarter of the last year. And that means this money has been lost by those savers who have been keeping their money presumably safely in the bank accounts. Now, precisely because young generation is willing to engage and engage directly with capital markets, it is also important for them, specifically for them, to be financially literate. What is important for financial literacy is, because it is a horizontal competence, that it goes across all areas of one's life. Somebody needs to be financially literate for any daily life decisions, like being able to pay bills, being able to manage your one's income and expenditures, prepare a budget. It also is relevant in the work-related environment, to understand what is a gross salary, what is a net salary, or even affecting the ability to conduct confident negotiation with an employer to agree on more advantageous financial terms in the agreement. So all of this is part of financial literacy, and retirement obviously is part of financial literacy as well, because one needs to ensure that the retirement period, or the period of let's say inactive phase of one's life in terms of employment, is covered. And for that, okay, it's one thing to rely on the state, but we also understand that increasingly states are getting into a problem to manage the pay-as-you-go types of pension arrangements, and hence again the role of financial markets and ability to plan your retirement long-term savings in a reasonable and in a sustainable way becomes very important. So if you wish, financial decisions and the need to be financially literate comes across all the spheres of one's life. And if you're not financially literate, that means you can have and experience problems throughout your life. So this is fundamental. This is fundamental. But at the same time, and this is quite interesting, and today, unfortunately, we don't have any representatives from member states, because that is a question that I have to the member states in some respects, is today, despite the fact that financial literacy is so important, and Annamaria called it like reading and writing, it is not formally acknowledged as one of the key 8 competences for lifelong learning. I think the debate is still ongoing whether it should be part of numeracy or part of entrepreneurship skills, but it's not there. So, for example, today it is considered to be key for you to speak several languages because multilingualism is on the list, but it's not supposed to be key for you to understand how to open a bank account or how to take a mortgage or how to seek financial advice. So under this Commission's mandate, and I've heard some praise for the Commissioner McGuinness, who indeed has taken this issue very seriously and has committed personally to make a change in this area. So for the first time, the Commission has actually actively worked on different projects in the area of financial education. And the reason why we didn't work in this area before was not because the Commission was lazy or the Commission did not want to do anything, but because of competence, because it is primarily member states' competence. And it is important that we see a lot of also private initiatives, and there is increased realization that it is a common objective. It remains to be largely member state competence, and hence we need a strong member states backing here. Now, of course, what we're trying to do at the EU level is to lift it up also to the European level, to have this debate at the European level, and perhaps to support the efforts of the member states. And this is how the common project with the OECD and member states came about, and Chiara has already mentioned this, the development of the financial competence framework, which is de facto an ABC, if you wish, for member states, for public institutions, but also private institutions, trainers, teachers, to come up with a training, with a class, with a program, with a material in the area of financial literacy. We started with adults because, of course, this is much closer to our playground, if I may say it that way, because, of course, adults have resources to invest. They are potential investors already today. But very quickly we realized, of course, that this is not enough because financial literacy of adults is something which is very complicated when it comes to implementation, to the uptake, because as you don't have a structural way of providing this training, it is based on voluntary commitment, on the engagement by each individual. And if there is no such engagement, the impact of any measures in the area of adult financial education is going to be limited. So where you can make the maximum impact, and a lot has been said about that, is precisely schools and kids. Because first of all, you have a more structured way of delivering financial education. And second of all, and this is where I think the mandatory requirement is so important, it becomes of your daily curriculum, and you are then being tested on that basis. Of course, there we also have some issues, if you wish, because as Chiara also said, it is not just about skills and awarenesses, it's also about behaviors and attitudes. And the traditional educational system is not set up to test so much behavior as it is set up to test a level of knowledge and awareness. But where we expect to see this change, of course, is much later, and that's why what we're doing today is so difficult, and that's why the commitment of our commissioner is so remarkable, because for a politician, very often they have a very short-term horizon. They want to commit to delivering action and then show how they're delivering them. And with financial literacy, it is an impossible task, because today you're planting seeds of something that you will see maybe a decade later, when these people actually become full-fledged adults with an income that they can spend, that they can plan, that they can manage, and that they can invest. So what we're doing today with our work is planting those seeds for what we hope to see by way of changed behavior many years down the road. And what is important with the work that we are doing, we're trying to really put ourselves in the shoes of school children. We're really trying to translate our competences in a way that makes the uptake easier. And this is not an easy task because obviously starting with the adult framework, we started with very comprehensive and very complex at times competences, very quickly to realize that these competences do not work for kids. So we had to actually translate those competences in a language that would be acceptable, understandable to kids, but also to teachers who would be translating those competences into actual training courses and material. And what is also very important in this regard, and I think somebody did say that, is to start really early. And I think and we've been discussing this yesterday in another event with Maria Lucia from Portugal, who from the Portuguese Central Bank, who remains one of the strongest advocates of very early financial education. In Portugal, financial education starts in kindergarten. And that is quite remarkable because this is where attitudes are being formed. And so the earlier you can start to shape those attitudes, the greater the success is going to be in an adult, in a behavior that an adult will form as part of its daily life, as part of the as part of daily and lifelong activities. So let me finish with that. I hope I didn't take up a lot of time, and I hope I did say something new compared to the other presenters. But as I said, it was difficult to be original coming last.
It was great, Tatyana, and it's great to see that you are so well convinced of the need of financial literacy, and also your emphasis on some basic truths, absolute truths that needs to guide investment, particularly by young people, were certainly noted. So it's time to move to the panel discussion. Annamaria, Chiara, Tatyana, you're going just to stay in the panel, and happy now just to give the floor to Benjumea, who is the CEO of the Flemish Investor Association in Belgium and a member of FISMA stakeholder group. You have the floor, Ben.
Thank you very much, Bernard. First, I would like to thank Ms. Panova. A very good shout out because she's not here today, but it is indeed true that Ms. Merit McGuinness was the first MEP to really focus heavily on financial education. We feel that it's very necessary, so thank you. Also appreciate very much Ms. Yon-Courtin, Ms. Benjumea to take the time to talk to us today, because I've heard several things that make me a big fan already. Might I suggest you have a coffee with your Belgian EP colleagues urgently? And we are honored, of course, by the presence of 3 leading ladies making an impact in this society. It may be Global Money Week this week, but I think we have an immediate impact from International Women's Day earlier this month. And if only we could have a similar impact in the financial education as quickly, we would be very happy. Now, I want to give the word as soon as possible to our young people. We have Kevin Boland from Ireland, who is a young professional, and we have 2 students, Kevin van Hevel from Belgium and Malgorzata Kupiec from Poland. All of them are members of the European Youth Parliament. They're all very active on the financial stage, so they may be not the typical representatives, but still. I've taken notes throughout the presentations, and I'm going to come back to them and ask how they feel about it. So the first thing I wanted to address here is Ms. Lusardi said, why do we need young people to care about finance? Because it's a better future for them and for us. So my first question would maybe to take a step back and ask Kevin, and Malgorzata, how do you feel about finance? Are we positive? Are we negative? Is finance a good thing? Do we invest? Maybe let's start with Malgorzata, because it's Women's Day today.
Thank you very much for the floor. I do, first of all, want to thank you, all of you, for coming and for recognizing the importance of youth in finance and making sure that the financial literacy is actually brought at the forefront of what we are doing here today. It is always lovely to hear that youth and youth's role in the way that we work is recognized. And as far as the finance and the question, I do think that finance is great, but that is because I interact with it on the daily basis. I study it at university, and I did pick it as my career. But I do think that there is quite a lot that we can still do to make that kind of thinking more popular amongst people who are not very much closely tied to finance. I do think that it's still quite a complicated field for a lot of people. There's a lot of terms that people do not know, which they definitely should, as we did already hear in quite a few of the speeches that we have heard. There's definitely a lot that we can still work on in terms of making finance more approachable and more accessible amongst youth. And just in general, amongst the general population, because it is not all about youth.
Okay. And then, of course, we've heard that mandatory financial education would be cost effective, but maybe Kevin van Hevel, you can respond. Did you actually get a lot of experience in school, or as you're also very active in a student investor body, is that where you really learn how to involve yourself?
Honestly, I hope it differs from country to country. But when I started at university and I had my first finance classes, it was very clear to me that simple concepts such as compound interests were completely new to me. And I can honestly safely say that that step up to university and then getting involved in a financial student body, especially in the board, was a real eye-opener in that sense. It made me realize that finance goes way beyond the limits of the banking system or the financial system of a government or any other company. We have studied the fields of alternative investments where people get wealthy or invest in things like cars, in things like watches, and finance is so much more than what the first glance says. I think schools, high schools, elementary schools, or even kindergartens, such as was said in Portugal, can really still grow a lot and make very big steps towards making young people much more aware of what finance actually entirely entails, and the effect it can have on a more pleasant life further along down the road.
Okay, and then maybe a little bit different point of view from Kevin Boland, who's already working, but we've heard from Ms. Yon-Courtin that it's a never-ending learning process. So whatever you learned during your education, do you have the possibility to implement it today while working?
Yeah, I think that's an interesting point. We saw some of the kind of financial stuff that's happening at the moment with the Credit Suisse and stuff like that. And it's very interesting talking to my colleagues in work. There's not that historical knowledge. People don't even really understand what's happening in 2008, let alone anything before that. So I think there is a requirement to constantly re-educate people and to block out time and really to build it into the day-to-day working and really spoon feed people information, because when you're working, you haven't necessarily got the time to block it out to do it. So it really has to be handed to you through either a government campaign or a media campaign of some sorts, because if it's not necessarily going to be utilized by people that in their working, because they get so busy and tied up, and they'll just put it into a savings account. And then if they look at finance more generally, they just see it as like the branding is kind of off. It's very much like your kind of crypto kind of bros, and it's not very it's a kind of toxic kind of environment. It's not necessarily something you relate to in terms of wanting to have sustainable finance or something like that. It's a lot of work needs to be done to bring people into that kind of area in that space.
I think this is indeed the point where I should stress the importance we give to things like employee shareholder plans, because I've heard several people mention behavioral finance. When do we actually learn things? When we need them, when we use them. So it's not maybe enough, as we've also heard, financial education is just an element in a total approach, in a total strategy, but we need to make sure that people can actually implement what they've learned. And this is something that Malgorzata has talked about. You've experienced a theoretical learning, but you say you don't have actual possibility to use it.
Yes, yes, that has been my experience, especially in university, where my knowledge and the way that we are being taught is being given at a very it's given as a lecture. It's given very theoretically. It's being given in a way that does not really allow us, or at least that is my very personal experience, that doesn't really allow us to use those skills, which therefore makes it very hard to actually make sure that we gain knowledge from it. So, for example, I do know about what is inflation. I do know about the different concepts, and I know everything on paper. But when it comes to actually implementing the knowledge, I am not sure if I would be able to actually do it without support of external practice that I do have, and I have gained through my involvement in European Youth Parliament, for example, because that is where I get to use those skills on a very practical basis. So yeah, that has been my experience. It is quite hard for the students at my university in particular to actually use those skills. We do not get really interactive chances to have meaningful education in terms of finance and the way that we interact with the financial literacy knowledge, which is a shame, I do think, as it means that we are not, therefore, after university, we are not able to actually implement that lifelong learning even, because we just don't know how to use those skills.
So that brings me back to Kevin. Well, something that Ms. Yon-Courtin said, there is no short-term impact from this effort because regulation takes a while, but it has long-lasting effects. But then Ms. Benjumea said we do have the financial competence framework. So Kevin, in your dealings with student investors, do you feel that having this financial competence framework is going to make life easier to engage other, or what is it that you would need to bring more people, more students to invest?
I think it's a very interesting question. Such a competence framework would allow for us to really quantify or put someone's knowledge on a scale, say, give it a score from 1 to 10 or however that would work. And it would also be a reality check possibly of some sorts for some people. I think there's plenty of students out there who believe they've mastered or they've gotten to know a lot about the world of finance, who are actually very much still unaware of the greater part. And there is many a student out there that has quite the opposite going in their life, where they are very financially literate, but they just don't realize it yet. They might have gotten it along from their parents, might have had some extra classes in school, or might have had a couple of hobbies, such as the YP, that has given them that. So I think a competence framework in that sense would allow for student bodies, but also for other organizations or even corporate enterprises to motivate students, young people, to test their own knowledge of finance, of the world of finance, and to verify where they are at exactly at that point in their life concerning financial knowledge.
Okay. I've also noted something that Guillaume Prasch said, as well as Ms. Panova, the need for independent advice. Now, Kevin Boland, you've been around a little bit longer and you're already working. Do you feel, and living in Dublin, I would say you should answer positive, but still, do you feel that independent advice, without inducements, without any reason to distrust, is readily available, or do you feel that young investors have a certain mistrust of the financial institutions?
Oh no, I don't think there's mistrust. I think there's a lack of choice. I think that's what some of the panelists have been saying before, that we have a very fragmented market at the moment. So, like, I think in Ireland, look, we have what, 2.5 banks and a handful of stockbrokers. So, like, I can name all like the venture capitalists off in one hand. Like, so it's a very small market. So there's not a lot of choice, and then people don't really bother. Then I think that's kind of the key issue. Like, and look, we can see it in Ireland in particular. When we've had deregulation in different markets, and bringing different markets together has really benefited small member states, and we really need to see that more, because if we don't have that, we really haven't got anywhere to go, and that's really the reason. It's not lack of trust; it's lack of choice.
Okay, then I'm going to get a little bit back towards attitudes. in general, you say there's not really a lack of trust in financial markets. And I will maybe first go to Kevin, because I know that this is a topic that was discussed with the student investor body Capitant. What is the reason that so many younger investors turn to instruments like crypto? Is it instead of the fear of risk, maybe just the love of risk? Is this like a certain energy drink games, like an up and down ride, or?
I think, and that comes from a very skeptical stance towards cryptocurrency. I feel like it's more of a roller coaster for a lot of people. I think young students, for a lot of students, this whole crypto thing was a very new concept. I think for a lot of people, it was just a very new concept, and it gained a lot of attention suddenly. It was incredibly accessible. New cryptocurrencies were made by the second. And I think for a lot of people, it was just a way of getting some adrenaline and hopefully some money out of it. From the people that I've seen, that I've personally witnessed investing in crypto, the behavior they showed was very similar to that of gamblers. They would buy crypto being absolutely sure that the value of it would absolutely surge. It would grow from 100 per crypto coin to 1,000 in 3 days, only for the opposite to happen and them laughing it off because, oh well, they lost 100 euros. Now it's only 10 euros, and it doesn't really matter that much. The volatility of it is also a very attractive thing, I think. So yeah, maybe to sum up, the adrenaline kick of being able to gamble a bit for the volatility of such a coin to take a surge or steep down low.
From this, I seem to understand, you may be aware that, at least we discussed this in ESMA, there is going to be regulation imposed on cryptocurrencies and NFTs and such instruments, that they have to adhere to the similar restrictions that any financial instrument must adhere to. You feel that is a good way to make these investors aware of the risks? Or do you think it will not make a difference to them because they're not there because of the risk, but because of potential outcomes? It's like the lottery.
No, precisely. I think I'm a firm believer that there are people out there that have figured crypto out, or NFTs, that they've quite figured it out how it works, and they are able to invest in such things with a very clear idea of what will probably happen, of its market behavior. But I think restrictions and regulations of some sort get a lot of the emotion out of the market, get a lot of the conspiracies out of the market. I don't know if you're probably very familiar with the concept of Wall Street bets at some point on Reddit. And I just hope that this can also prevent people, on one hand, I love it for you if it happens to you, but on the one hand, from making thousands, tens of thousands in profit all of a sudden, but it can also prevent that other people who are less lucky and less financial literate sometimes, who really gambled, it can prevent them from making tens of thousands of euros in losses. I hope it stabilizes the market a bit.
Okay. Now, we've all said we want more retail investors to participate in the financial markets, and in that sense, never waste a good crisis. The fact that there was some problems with crypto may mean that we've attracted more people to take an interest in finance, at the least. But this would be a question for Malgorzata. Is there a difference for boys, for girls, for Eastern versus Western countries? Do you feel everybody has the same access, or do you feel that some countries have more hurdles?
I do definitely think that there is a very big discrepancy, both between genders and between races, and then countries as well, as the differences that we have go pretty deep. So there are definitely differences in that regard. As far as the different countries, I mean, I am from Poland. Poland, as I have seen in one of the slides, is pretty high in terms of, lands pretty high in terms of financial literacy amongst youth. But that is because our education for finance is mandatory and has been mandatory for quite a long while. But there definitely are barriers to access for very different reasons. That is because we have different historical backgrounds, we have different cultural backgrounds. As far as gender, I can speak for that myself because I am a female in finance. You can pretty much tell that there are very big differences in how I am being approached and how women are being approached. That also stems from quite a long, deep-rooted history of discrimination of genders. But yeah, I do think that there are differences. I do think there's a lot that we can still do to tackle these, and we should. But undeniably, there are quite big differences, yes.
Okay. And then we've also talked a little bit about digitalization and the regulation and the initiatives that are going to be launched in that respect. So this might be a question for Kevin Boland. Digitalization reaches more people, of course, but at the same time, it risks reaching more uneducated users. How do you feel about that?
Yes, it's very much the case that I think, you know, access doesn't necessarily help by itself. You need to have people to be educated, as you say, on it. And that is something that I would fear. And you can see with the crypto to a certain extent, you know, all these people have been recently burnt in the market, and they might not necessarily be, you know, that happy about going again, and they might be happy to kind of keep their money outside of the financial system, or at least in a savings account. And that is a concern. So, but then at the same time, if you over-regulate something, you might then kind of, you know, squeeze the kind of innovation out of it as well. So there's a balancing act there that has to be made. But you know, I think digitalization has definitely helped, and has helped, you know, people get more awareness of like what is out there as well. And I think we talked about the comparisons to the US as well. We kind of really see now that, look, a lot is happening in the US, and we really should probably try to do something somewhat similar. And maybe that will bring some sort of groundswell of support, or at least bring it back into the public consciousness. This is something that should be pursued, and something that should be looked at. So there's definitely pros and cons to digitalization.
Okay, we still have Ms. Lusardi on the screen with us. I wanted to ask you, have you heard anything from these young investors that you feel you need to elaborate on or respond to? And you're still on mute.
Very glad to hear the interest about this topic. And I would like actually to turn to them to ask what is a potential solution, you know, to this, the fact that, for example, young people are not well informed, that young people face a very different world. So how do you, what are some of the solutions that you propose here, since there are policymakers that can listen?
Go, Malgorzata.
I think we've heard quite a lot about how the youth does not know things about finance, and how we need to learn more about it. And I think that is definitely true. But we cannot really address it without involving youth in creating the curriculums and in making those decisions that will affect directly how we learn about finance. So initiatives exactly like this, where youth representatives can be involved, are definitely important. I do want to also say that us three represent quite a specific group of people who have access to finance and who have been involved with it. Undeniably, there's also quite a lot of privilege in being involved in the non-governmental sector. So as far as youth from marginalized communities, for example, it would have to go directly to them. But I do think that involving youth constantly in tracking their needs and in making sure that they are involved in addressing the issue should be a constant effort that is being made by policymakers, for sure.
And Kevin van Hevel?
Thank you. I think, and this is quite a different approach, but it also kind of embroiders on what Kevin Boland said earlier. Digitalization in itself harnesses a lot of potential and some risks, but what we have, for instance, in Flanders, the Flemish version of the Times have this yearly competition now, the stock market rally, if that's the correct translation, which is incredibly accessible. It is not with real money, but it is a competition where people from all over the country can just compete and try and make the largest amount of profit on the stock market, which not only does it make the idea of a stock market and the way it functions more accessible, but it's also it's a lifelong learning thing. There's no age limit for it. There's no age restrictions in general, I believe, but I might be wrong in that. And mostly it's completely danger-free. There's some incentive because there are prizes to win. And it is a very fun way to teach both young people, 16, 17, 18-year-olds, just like myself a couple of years ago, and people who are a bit older of age, 50s, in their 50s or 60s, not to call people in their 50s or 60s old, but Ben gets the point. To also give them a way and a means of learning new things about a sector that might have been completely strange to them.
Okay. Ms. Monticone, did you want to respond to anything?
Thank you very much. I actually appreciate a lot the opportunity to participate in this panel because, as you can imagine, we work a lot with policymakers, with people of our age, but we don't have often a chance to discuss with the real young people. And I also appreciate that you're definitely not representative in terms of the statistics that we have on financial literacy of young people, but you do have very informed views, and I appreciate that a lot. So I want to take this opportunity to ask you something that is similar to what Annamaria raised, but it's more focused on the approach and perhaps delivery channels or methods to do financial education with young people. So based on your experience or what you've seen, so how would you advise policymakers or anyone, practitioners working in this field, how to talk to young people about financial education? What are the right ways, the right channels? So just to make an example, we were talking about investments today, new retail investors approaching financial markets. So the way in which young people, from what I can understand and gather, the way in which young people are starting to participate in financial markets now is very different from what it used to be maybe 20 or 30 years ago. It's much more through apps. It's much more in a self-directed way, in a direct way, without necessarily many intermediaries or advisors. Or so on our side, on the policymaker side, it's useful for us to understand how you would like to be taught, so that we can adapt the channels, and not only the messages, but also the channels to talk to you.
Okay. And Malgorzata wants to react to that, and I think Kevin as well later.
As I have previously mentioned, for example, my experience with financial education is very technical. It's very academic. It's very read this definition, remember it, and then write it down on the exam, but never actually use it unless you have to. And I think that is definitely something that needs to change in regards to how we educate the youth. There needs to be more of an approach where financial education is practical and we get to use these skills. So that's definitely one thing. And then another thing that I do think has been mentioned quite a lot during this webinar is that education at school, it does need to be mandatory, I do agree, but I don't think that it can fully, the financial literacy education can fully be reliant on schools. We do need to focus on the entire environment, on parents, on everything else. And with the magnitude of how big this issue is, with the magnitude of how many people do not possess financial literacy, I do think that there needs to be engagement of other actors. So for example, the third sector as well. I speak as a representative, so I definitely will be mentioning it, but I do think that there's quite a big role that the third sector plays in how that education is being dispersed. For example, my personal choice of going into finance stems directly from the fact that I was involved in this organization. Otherwise, I would not have picked it, and I would not have even thought about the fact that financial literacy is something that I might actually want to enjoy myself, other than for a reason that is not fear, because I do think that youth right now fears it. So to summarize, practical approach, maybe some informal elements, but that definitely is a subjective statement, and then involvement of the third sector and all of the actors that are possible might be useful in terms of educating you.
Okay, Kevin Boland, you wanted to say something?
Yeah, just to add to that, I think like you need to build networks. It can't be kind of just dry material that's up on a website somewhere. It has to be something that people can engage with, either online or offline in communities. And I think that's really how it will build and spread. So some sort of, OECD or EU run program, in the background is something that's probably the best approach to take. And then it builds up a mindset for people when they're young, be it in college or even before that. I think that's a key avenue to, as we said there, to make it practical as well is key, because if it's too wordy and too just, words on a page, people aren't going to engage. And when you make it fun, make it active, make it interesting.
And I saw, Kevin, you wanted to say something, but we are almost at the end of our allotted time. So I quickly wanted to go to Ms. Panova and see if she had anything to add yet.
Maybe just a few words, but again, coming last always has the advantages and disadvantages. I've been impressed, I have to say, by the quality of the young speakers. Honestly, I mean, you've been giving off the cuff comments on questions that I myself was actually pondering on. So it's really, as they say in France, chapeau, quite incredible. What Margareta, I wanted to make a point, maybe a remark based building on what you said, which is quite interesting and made me think that there is some sort of disconnect between, because the way we approach this is, of course, for us it's a continuum. So you build knowledge, awareness, then you move on to behaviors and attitudes. But the way you're presenting that there is some sort of disconnect between one part focusing on knowledge and awareness and the part building on behavior. So there are no links in between these two parts, and something in the educational system does not allow you to create those links in a way that would enable you, actually, because it's all about enabling. I kind of see and sense from what you said that there is this missing enabler, which in a way made me think that perhaps the standard frame for traditional school learning and programs that we have at school for all kinds of disciplines does not necessarily fit for the discipline of financial literacy, because it's so broad and it's so much related to actual behavioral aspects that just giving you a theoretical background is simply not enough. That you need to be plunged into the actual environment, of course, maybe protected environment, but still an environment to allow you to trigger, your thinking, your actual behavioral change. And I was telling to myself, and maybe this is a question that I have to all of you. Of course, you are not the representative, sample of the school children or university children, because you advance in these matters. But is there some form of return feedback channel to your state body, education body, whereby you can actually provide this feedback? Because okay, there's so much we can do at a EU level, and I think there's a lot that can be done in terms of kind of building networks that I think Kevin mentioned. All of this, also private initiatives or non-public initiatives, all of this is very valid. But I think I have a feeling that something is broken within, and for that to be fixed, you actually need to be very vocal about the problem and reach out to the educational bodies and pass the message to the ministers of education that something needs to be fixed within curricula. Because even if, even where financial literacy is as a mandatory discipline in schools, even in those member states, doesn't seem to work properly, then what can we say about member states where there is no financial literacy discipline? Sorry, this is a longish question, but...
I'm going to give the word to Kevin. I just wanted to say that as a member of Better Finance and the national representative in Belgium, that in most of the European countries, there is a body that represents individual investors from any age, and that should theoretically be the channel. I do agree that we not necessarily always have a seat at the right table, but I think we are making strides, and by bringing this to a European level, that we do have a channel to communicate. Now, I'll first go to Kevin van Hevel.
I think it's a great question, and I think both in the European Youth Parliament and where I'm active at Capitant, what we essentially do is it's a bunch of young people gathering, reaching out, really stretching out even towards policymakers, towards stakeholders, people who do this for a living, trying to be heard. And I think it's actually a beautiful thing whenever we have guests, the CEOs, CFOs, policymakers, lawmakers, politicians, who see what we do, who see what we discuss and what we're interested in as young people, as 18, 25-year-olds. They are always very impressed, and they're always very intrigued and interested in the insights that we have. So perhaps Ben is right, and the right institutions or the right bodies don't always get a seat at the right table. But perhaps it's also something for both youth organizations and such organizations to work towards, is to meet somewhere in the middle in this non-formal, informal setting, if that makes sense.
It does. And Kevin Boland?
Yeah, no, I can only speak for Ireland. I think the attitudes are definitely changing, and a lot of work has been done at the university level and the stakeholder level. But we are kind of reaching the point, and this is for like the European Commission to recognise. I know Commissioner McGuinness and Minister Donoghue are doing work on this. But like the capital union has to we need more choice. There needs to be more money put into the system, particularly for the smaller member states, to kind of get this up and running. I think that is a key point that I would say back when we have these sort of panel discussions, because there's only so much, and that kind of missing enabler is actually the choice to do more.
Okay. I feel we're almost at the end of our time, so I'll quickly go over the conclusions I typed here on my screen while you were all speaking. So we feel very good steps to take, indeed, the framework for educational experience, the outreach, the communication and trust. Mandatory educational end terms for financial literacy should indeed be imposed. But of course, government imposed versus general interest can be also helped through positive speech. We do hear a lot of maybe on the political end, I would say, negativity about investors. This might be a national thing, but more and more governments are looking at investors to help fill the gap in the national budget, while we actually feel that taking away the hurdles for investors doesn't cost them anything, but makes it easier to tax more money on the gains rather than before even investing. I've also noted tangible experience is crucial towards a continuum of learning. So again, removing obstacles towards participation, it doesn't cost money. It requires the commitment of all stakeholders. I've noted employee shareholder programs. I've noted investment clubs like Capitant, bringing young people in direct interaction with the exchange. We do have, of course, in Belgium, some initiatives like Wikilab from our regulator doing exactly the same thing, bringing young people into contact. If you don't have it in your country, send them over. Sometimes we do good things in Belgium. I've also noted, we haven't really talked about that, but I always say this: investing is about the most social thing you can do with your money, because it brings generations together. We find topics that we can discuss together. I've taken note that sometimes we need oblique strategies rather than go straight for the kill and talk to people about investing. We might talk about their life. And in that sense, what Ms. Lusardi said, and I paraphrase a little bit, plant your money to grow your future, seems like the perfect way to end our part, and give the word back to Bernard and Guillaume if they still want to add anything to round up this effort. I think I've heard a lot of interesting things today. I'm very positive, at the very least, for the foreseeable future. Bernard.
Okay, let me just thank you very much for your participation. And just to the remarks of Chiara, I would say that why don't, and even Tatyana, I mean, why don't you consider organizing, a meeting between representative of the European Youth Parliament and your team, just to discuss that further. And because I think that the discussion was too short, but there is a potential for you to get some solution or idea of a potential solution. So just as a suggestion, but once again, thank you very much. The event has been recorded, so it'll be just available, I'm sure, on Better Finance and EFAMA website. So don't hesitate to draw the attention of your colleagues and friends. I give you the floor, Guillaume.
Thank you, Bernard, and thank you, everyone. And in particular, I found extremely interesting the reactions of the members of the European Youth Parliament. I think it's great to have a discussion with you, because what will matter more and more, of course, is the new generations of savers and investors. And as Annamaria, for example, said, and we used to say that at a hearing in the European Parliament last year, actually, they have more on their shoulders. You guys have more on their shoulders, because the policymakers and the environment are putting much more responsibility on your shoulders in terms of retirement. You are always told, you should save earlier and more for your retirement. That was not the case of the older generation. And also you have other pressures like also should save in a greener way, etc. So I just want to make just one comment on what Tatyana Panova said, and again, I'm thanking all the I think all of the speakers were great. She said that financial education is primarily a competence of member states, and that's of course entirely true, and that limits, of course, the what the EU level policymakers can do. But that does not apply so much to adult financial education. It applies to the children and student education, and we strongly believe at Better Finance that EU policymakers can do a lot for adults and young adults, financial education, investment education, and especially in the area of independent advice. Because I give you just one example. For example, in Belgium, if you want to have a one-year term savings at your bank, it's very difficult to find more than 1%. And that's far away from inflation, as we all discussed during this panel. Very few retail distributors will tell you that you could buy instead a one-year listed bond on the bond market on the internet, and that would return about 3% to you instead of 1%. An independent advisor would be more likely to tell you that than someone who is only paid on sales commission. Thanks a lot again, and I second the suggestion of Bernard that we should not stop the discussion and the debate there. It's too important for savers, for the capital market union, but therefore to the whole economy and society. Thank you very much.